Welcome, dear traders. You are watching a video review of the Asian session. Following the results of the FOMC meeting, Jerome Powell said that the Fed has a good chance for a soft landing, yet it will not be easy to achieve. Currently, the regulator is more hawkish than other central banks. However, yesterday, Powell also made some dovish statements that surprised market participants. Let's discuss what actually happened and how traders reacted to Powell's speech. After the two-day meeting, the central bank decided to raise the key rate by 50 basis points. Now it amounts to 1%, and this was the second rate increase in a row and the largest since 2000. Inflation has already hit a four-decade high, which forces the Fed to take more aggressive measures. However, all market participants were ready for a rate increase. They priced in a long time ago. Besides, speculators have no doubts that the Fed will continue to hike the key rate at its next meetings. There was one moment that might have caught investors off guard. Jerome Powell made some dovish comments, saying that the central bank is not actively considering a 75 basis point increase in June. It was somewhat a dovish signal from the regulator. Optimism returned to Wall Street amid Powell's dovish comments and upbeat earnings reports. So the equity market closed in the black of Wednesday, with all three main indexes growing by 3%. Nevertheless, in the Asian session, yesterday's euphoria subsided. Futures on stocks declined. Forex traders also factored in the Fed's rate hike. As we predicted, the greenback fell by 0.9% yesterday to 102.45. However, it was a short-term drop. Today, the US dollar has returned to its previous highs. In the Asian session, the US dollar index was trading sluggishly due to the absence of Japanese traders. It was consolidating within the range of 102.35 and 102.98. At the moment of preparing material for this video, the US currency was trading at 120.85 against its main rivals. Bear in mind that the greenback climbs higher not only amid the Fed's monetary policy decisions. Besides, the currency of the world's strongest economy is unlikely to decline anytime soon. There are many negative factors such as geopolitical risks, the virus spread in China, and a decrease in demand for emerging market currencies that facilitate the US dollar's further growth. So, in the near future, a slump in the volume of long positions on the US dollar looks extremely unlikely. In the Asian session, we can still witness how yesterday's drop in the greenback impacted the movements of its major rivals. The greenback experienced the sharpest drop in more than a month against its main counterparts. As a result, it shed 0.8% against the yen following the trading results on Wednesday. Yesterday, after the announcement of the FOMC meeting results, the dollar-yen pair slid down and tested the level of 128.77 twice. Despite a short-term weakness, the US dollar remains strong. This is why the pair was moving today in the price corridor of 128.73 and 129.82. At the moment of preparing material, the pair approached a high of 129.75. Trading floors in Japan are still closed on the occasion of a Golden Week, and today the country celebrates a Children's Day. The Bank of Japan voiced its monetary policy decision ahead of the long weekend. On April 28, the regulator decided to keep the main parameters of a monetary policy unchanged. However, it managed to catch investors by surprise when it clarified its plans for government bond purchases. The Bank of Japan said it would buy an unlimited amount of 10-year government bonds at 0.25% to control the yield curve. While other large central banks are preparing to tighten monetary policy, the Japanese regulator goes against the mainstream trend. The Reserve Bank of Australia has raised the cash rate on Tuesday for the first time in more than a decade, and now the key rate totals 0.35%. The bank was forced to take measures due to galloping inflation, and it has already soared to a 21-year high. Reserve Bank of Australia Governor Philip Lowe said that it was the right time to withdraw monetary support adopted to help the Australian economy through the pandemic. Analysts noted that the regulator picked rather an unfavorable moment for such a step. They believe that this decision may increase the burden on household budgets. Given the upcoming election in Australia, it may undermine the rating of the current Prime Minister, although Prime Minister Scott Morrison rejected suggestions that an interest rate hike could hurt him on polling day. Analysts are not so certain. In the history of Australia, there was already such a precedent in 2007. Back then, the central banks also raised the key rate during the election campaign, and many experts were convinced that this may adversely affect the ratings of Prime Minister John Howard, and he could lose his seat. Interestingly, Philip Lowe was appointed as the governor of the Reserve Bank of Australia in 2016 by former Treasury Secretary Scott Morrison. The Aussie jumped quite expectedly following the Reserve Bank of Australia's hawkish decision. It rose by 2.2%, logging the biggest increase since the end of 2011. The Reserve Bank of Australia signaled more rate hikes ahead. It means that the Australian currency has all chances to start a long-term rally. Following a decline in the greenback, the Aussie surged to a high of 0.7265, and today its upward movement was less noticeable, so the AUD USD pair retreated, trading in the range of 0.7203 and 7266. At the moment of preparing material for this video, the pair reached 0.7218, moving downwards. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. Feel free to leave your feedback and do not miss our next video review. See you soon.